Hello everyone. Today I'm reviewing Goldwave EA MT5. My conclusion up front, the numbers look attractive, but this is an EA you should approach very carefully. The biggest concerns are that the forward performance and the backtest behavior do not seem to match, and the results may be the kind that looks great in the short term. First, let's talk about the forward performance. Goldwave EA MT5 has a public MQL5 signal. That is a positive point because you can track the results on a third-party platform. From the signal statistics, the track record is about 33 weeks with around 148 trades. The win rate is extremely high, roughly 97%, and the growth figure also looks strong. However, here is what I want to emphasize. A high win rate does not mean the strategy is safe. In this signal, the average loss is larger than the average profit. In other words, the structure is many small wins and heavier losses. This is a common profile in EAs where stop losses are slow or losses are held longer. And the slower the stop loss, the higher the win rate tends to become. So short-term forward results can look unusually good, but the downside is clear. A small number of losses can wipe out a large portion of gains. That's why the better the forward stats look, the more cautious you should be. At this point, I would not call it proven. I would call it something you must keep watching, especially when market conditions turn unfavorable. Next, let's talk about my backtest verification. I ran my own backtest using the MT5 strategy tester. Here were the conditions. The period was from January 1st, 2005 to January 10th, 2026, about 20 years. The symbol was ZOST. The initial deposit was $10,000. The lot size was fixed at 0.01. All other settings were left at default, and I used a spread of 60 points. The result was a curve that looked almost too perfect. A very smooth, clean upward slope. Visually, it looks extremely strong. I also evaluated drawdown in absolute US dollars, not percentage, because percentages depend heavily on balance and lot sizing. Under this fixed lot setup, the maximum equity drawdown was around $74, which looks very small. But here is the major red flag. Even though the test window starts in 2005, actual trading only begins after 2018. That means the EA's performance from 2005 to 2017 cannot be evaluated at all. I cannot say for sure whether the backtest is intentionally restricted or whether the strategy is designed to trade only within specific price ranges or market regimes. But the practical outcome is the same. It looks like a 20-year test, but in reality, it is mostly a post-2018 test. That is a serious limitation for any long-term evaluation. Now let's move to the trading logic and the risk profile. According to the developer, this EA does not use grid or martingale methods. That is a positive claim, because those are common blow-up mechanisms. But based on the forward behavior, this EA also looks scalping-oriented, targeting very small price moves. Scalping performance is highly sensitive to the trading environment. Spread, slippage, execution quality, and server latency can all change the outcome significantly. And the more important point is what the forward behavior suggests. Small take profits, but slow stop-loss behavior. When an EA tends to hold positions during adverse moves, it can keep the win rate high and make short-term results look great. But when the market shifts, a few large losses can break the curve. And here is the key mismatch. The backtest looks like it has decent risk-reward, but the forward statistics do not. That suggests either the default settings are not the same as the forward settings, or broker conditions and external factors are changing the behavior. So it is dangerous to trust the clean backtest curve at face value. Let's summarize from a warning perspective. The positives are that a public MQL5 signal exists, so you can monitor performance, and there are more than 100 trades on record. Also, the developer claims no grid and no martingale, but the risks are bigger. The forward profile suggests the average loss is larger than the average profit, and stop-loss behavior may be slow. This is a classic pattern where short-term performance can look better than it will be long-term. The backtest looks too clean, and trading is concentrated after 2018, so pre-2018 performance is unknown. And because it is scalping-oriented, results depend heavily on execution conditions, so reproducibility is not guaranteed. So my view as of today is this. Do not judge this EA by the headline numbers. Treat it as something you must watch carefully and verify over time. If you monitor one thing, don't focus on the win rate. Focus on how it loses, how large each loss is, how often it happens, and how it behaves in unfavorable regimes. Without that, you can't draw a reliable conclusion. That's my review of Goldwave EA MT5. Thanks for watching.